I've been saying this forever. Big institutions are becoming bigger at the cost of smaller institutions. A smaller institution cannot be a full suite banking service provider because the amount of investments required, they cannot afford at the same pace as what we can.
Hey guys, welcome to the Money Mindset. Today I have someone very special with me, someone who's been a part of the banking industry for over 30 years and for the last 7 years has been running the third largest private sector bank in the country. I'm talking about Amitabh Chaudhry of Axis Bank. What is the biggest issue that the industry is facing today?
How do I make myself even relevant? I have the best rated app in the world, but if enough people are going to use it, what will I do with that best rated app?
Household debt as a percentage of GDP has gone up to more than 40%. And I'm talking more about people perhaps taking more personal loans, maxing their credit cards, etc.
So you have to worry about who's taking this debt. 70% of this debt is in the super prime category. So these are people who can afford it.
There are some complaints that there has been inconsistency in credit costs. But overall in credit costs, what's your view?
So if you take some of those one-off costs out of the equation, I think.
Hey guys, welcome to the Money Mindset. Today I have someone very special with me, someone who's been a part of the banking industry for over 30 years and for the last 7 years has been running the third largest private sector bank in the country. I'm talking about Amitabh Chaudhry of Axis Bank. He's here with me on the Money Mindset. Amitabh, thank you so much for being
Thank you,
with
such
me.
a pleasure.
It's so nice speaking to you after a very, very long time. So happy to have this conversation. But how has life been for you so far?
Well, in Indian banking, life is ever changing, and there's always excitement every day. There is something exploding in some part of the bank all the time. But you're part of a growing economy, so a lot of excitement. You can actually make a real impact. You can impact our customers. You can impact our employees. You can impact the way banking is getting shaped in this country. So, having a great time.
That's important. Having a great time is the most important thing. It's been what, over 30 years now that you've been in this
Yes.
industry?
So yes, to be able to get up in the morning and be excited about what you're going to do every day is very, very important. Otherwise, you can't bring about any change in what you do. So I think maybe the people who work in Access sometimes suffer me more than they would want. But every day is exciting. That's the way I see it.
So you still get up every day with the same motivation that you did 30 years ago?
I don't think my energy levels have gone down. Maybe the way I deal with problems now and deal with people and how I push the agenda might have changed. People tell me I mellowed down, which is good. Because I've realized over a period of time to achieve the same result, you don't have to be jumping up and down. You can manage it without doing too much of it. So, yes, the energy levels have not changed at all. Actually, I think they've gone up because I think more can be done. But yes, the style maybe has changed and I've maybe matured over a period of time. So in that sense, maybe the employees can work with me better than they have done before. But it has been, God has been kind. I'm only grateful for whatever platform I've got and what I've been able to do. So,
I've known you as someone who's, I've watched you run your business for over maybe 7, 8, 10, 15 years. I've known you as someone who's really feisty, someone who doesn't mince words, someone who always says things as it is. Are you still that way?
I hope so. And I do think so because I do believe it is very important to speak your mind. You don't have to, be too blunt about it, but it is important to get the message across. It is very important to get the message across to your customers, to your employees, to your shareholders, because I think they appreciate it over a period of time. They respect you that what you are saying is what you believe in. It's not that you need to stick to what you say. If the facts state otherwise or you learn over a period of time, very happy to change my view. But that's my view. That's the logic to my view. And I think I do try to communicate that pretty consistently to all stakeholders of mine. And that has at least worked for me. I think people do respect me and do value me for the fact that I'm not saying two different things to two different people. I'm saying the same thing again and again. And I think even when you talk to the regulators or your seniors, they would appreciate a view. I think a lot of people keep hedging so much that you don't even know which side of the fence they're standing on.
Yeah.
I think sometimes it's important for people to be counted and for others to know which side of the fence you are on, so they can actually have a real dialogue. I believe as a result, I connect better with employees, I connect better with the customers, and they tend to appreciate your view also because they know you will have a view and you will express it and you will have a logic to it. It might not be right all the time. So I'm fully aware that the fact that I have a view doesn't mean that I'm right. The fact is that I have a view. And I'm happy for that view to be changed based on new data or someone else's perspective, which I might not be aware of. And I also don't form my views easily. I read a lot, I talk to a lot of people, and I try to understand and appreciate where they are coming from and then form a view. So it's important, when you're trying to push an agenda or trying to push a vision, that you're hearing a lot, you're listening a lot, you're reading a lot, you're meeting a lot of people, and try to kind of just connect those dots and then form a perspective which people can relate to, can align to, can get motivated by. Because as a leader, I have to ensure that not only people are aligned, but they're motivated. So keeps life interesting.
So my core audience is, a lot of young people who are between the ages of, say, 20 to about 35, 40, and a lot of people navigating their lives in today's day and age, which is very challenging. So my aim with this interaction is just to pick your brains to understand more, not just about the banking industry, but in general, what's happening in India. But before that, I want to get the elephant out of the room. So let me talk about that. The recent resignation of Puneet as CFO, and he is somebody who's known to be very stable in the organization, someone who's been there for so many years. I wanted your view on how things are going to transpire henceforth. Is there any transition plan in place? Because I think that's what shareholders want to know.
So, when you try to hire a talent of a certain kind, you will have situations where these people will have aspirations. They will have a certain timeline in mind in terms of how they want to progress through the corporate world. And sometimes those aspirations cannot necessarily be met by the organization they are part of, because the organization's context could be different. The positions that are potentially open might not be as much as whether they can meet the aspirations of the people concerned. We took a bet on Puneet when he was CFO of Tata Finance. At that time, it was a relatively smaller organization, and Puneet has done an incredible job. We are very proud of the fact that now Axis Bank has started contributing people to the banking industry and otherwise at large, which just goes to show the kind of talent we are hiring and kind of the leadership we are developing, which people now value and they are going after. Obviously, some of these changes do cause some disruption, but they also lead to a couple of other things. One, it allows you to take bets on some new people. It opens up the organization for other people who are to kind of, we can take a leap of faith on them and they can do bigger roles. So it gives some growth opportunity to people concerned. It further reinforces our view that I think we're doing a good job with development of the leadership pipeline. So we need to do more of it. And that's good because, ultimately they all become ambassadors of Axis. If they believe that they are moving in their corporate careers and Axis had a role to play in that, they are ambassadors of our bank. And that's great because end of the day, they cannot take Axis out of their system. And I do hope they cannot take Axis out of their system, so which is good for us. And from our perspective, we know that this is a reality, that we will keep facing situations if we are hiring a high potential talent that unexpectedly sometimes people will find opportunities and they will leave. So
do
you
you have
need to
someone? Do you
so
have
you
a
are obviously,
transition in place?
absolutely. So you do succession planning properly. You know who are the people available in the system who could take over the job immediately. In some cases, if you know that people are not necessarily ready, you scan the market and ensure that you appoint people who can come and play the deputy role, so that tomorrow, if a position was to open up, they could easily take over the job. I think over the last 4 or 5 years, as we have lost people and we have lost senior people, there's been absolutely no hiccup. We have today standing in the market where we are able to attract talent, we are able to develop the right kind of leadership and replace them pretty quickly, or attract right talent from outside. I don't think that has been a problem. I mean, you might be aware, we recently appointed Chief of AI, and we are delighted to have her in the system. She was running the McKinsey practice in India and South Asia for AI. And we are able to get this talent in because we thought that we need to invest in a talent of this nature. We needed someone to run this very important area of focus for us. And we were able to showcase that we are very serious about what we intend to do in AI. So I believe that we are developing the right kind of leadership. And if we, for some reason, in some specific job, might not have the right person, we can attract the right person from outside, because I think people see Axis as being very serious and developing the right kind of talent over the last 5 or 6
So
years.
in terms of a timeline,
it's a hiccup, but we'll manage.
in terms of a timeline, when
We
will
will have
you-
the person in place in the right time frame. Absolutely not a problem.
Okay, all
You can
right.
see I'm smiling while answering the question. So,
So you're not stressed out about it, at least.
absolutely not.
Okay, fair enough. Now, let me, talk to you about some of the pressing issues, right? As someone who is running the third largest private sector bank in the country, from your vantage point, what is the biggest issue that the industry is facing today?
So, there are a couple of obviously imminent challenges which are coming our way. One is the whole investment in AI and what AI could do to how the future of banking could look like. But firstly, AI is a great opportunity and a huge opportunity for the entire banking system, which also means that you need to have a clear vision on what AI can do for you and how will you get to your destination, and are you making the right kind of investments in people, technology, uh, models, which parts of the bank you're making the investment in, because people who can get this right, um, firstly, it will require a lot of investment, and secondly, you need to get this right. So if you can get this right, you can get huge gains in terms of both revenue enhancement and cost efficiencies, and whatever impact on the P&L you can have, you go and reinvest in the business. So you can create a moat because AI is a huge opportunity. AI also brings a lot of risk with it. You already are aware of various models which have been launched, which could, cybersecurity is already an issue. It could become a bigger issue going forward. So, cybersecurity, all of us anyway worry about. With what is happening with AI, we need to worry about it even more than before. I also believe that the expectations of the customers at large and regulators is also changing quite rapidly. They expect customers to be treated well. Customers expect a very different experience. Customers expect instant, seamless kind of experience. Customers expect that we should know them before even they tell us who they are. For us to be able to do that, again, huge investments required in analytics, technology, putting it all together, being able to recognize the customer quickly, being able to put myriad systems together in such a way that not only I can recognize the customer, I can give a seamless experience, and at the same time provide the product and the service as quickly as possible. So it is not just about what is happening with AI and cybersecurity, but it's also the customer expectations and regulatory expectations are changing. We are facing intense competition. The deposit growth in India has slowed down. Deposit has become the core of how growth in banking will come from. So as investments, as Indians have become more and more educated about financial products, and as they're putting some of their savings in mutual funds and NPS and insurance, share of CASA is going down. So share of cheap deposits is going down. The competition for those cheap deposits is only intensifying. Also, as customers are investing with more and more financial service providers, primacy of relationship is going away. With AI, the primacy of relationship could reduce even further, because if I can implement the right AI tools, my understanding of you as a customer might be even better than a bank who's a primary bank for you, because they only have your data. I might have your data about everything you do. So in that sense, when customer is going and kind of looking at various apps, and they are actually investing in various products, and my relationship is not the primary relationship, how do I make myself relevant in front of the customer? So customer expectations are changing, but then the other part of the other side of the coin is, how do I make myself even relevant? The customer experience will come later. First, I have to be relevant to the customer for them to experience me. I have the best rated app, mobile app in the world, but if enough people are going to use it, what will I do with that best rated app? So I need to get more and more people to first come and use the app, then only they can experience it. So that's the third thing which is a big issue. Now, with the huge investments required in analytics, technology, cybersecurity, and stuff of that nature, I've been saying this forever. Big institutions are becoming bigger at the cost of smaller institutions, and this trend is only intensifying. A smaller institution cannot be a full suite service, banking service provider, because the amount of investments required, they cannot afford at the same pace as what we can. I can compete with the fintechs, I can compete with NBFCs, I can compete with, some NBFC which might have found a niche space, but over a period of time, given our size and some of the other banks also, we can find reach a reasonable market share in each of those areas. So one has to ask ourselves a question, and that's an important trend. Does not worry us, but what I worry about is, I do not want the banks who are bigger than me to become bigger than me. more. I want to close the gap rather than the gap increasing.
So
So
how are you closing the gap in terms of investing in AI, or even in terms of, I mean, you spoke about CASA and you spoke about credit growth. What do you, or deposit growth, the slowdown rather. What is Axis Bank doing to kind of close the gap with not just the larger banks, but other competitors, right? Fintech companies, new startups, etc.
So first is that we obviously need to ensure that our ability to garner deposits goes to a completely different level. If we have 5% market share in deposits, that share has to increase. And so what we can do as an institution to get more deposits into the system, I'm adding more branches. I'm adding more smarter branches. The whole orchestration which we are creating in Axis Bank in terms of approaching a market. What do I do with the customer on a daily basis? What technology enablers I can provide to my RMs or my entire workforce so they're more relevant in front of the customer? How can I use AI to make them more relevant? So a lot of work around how do I garner more deposits from a new customer and from an existing customer. And that journey we have been on for the last 3-4 years. And that's why it gives us the confidence to say that we believe that we can grow advances at a rate of growth which is about 300 basis points more than the industry. And that can only happen if we grow the deposits also at the same rate. So we do believe that with all the work which we have done and what we intend to do and what our vision is, that on the deposit side, we can grow at a faster pace, right, than the industry. Now, we are not talking about some specific banks here, but generally the industry. Second, we need to create those platforms using some of the new technologies where I can understand the customer better. I can underwrite the customer better. I can provide a more seamless experience. So we are doing things of that nature and doing a lot of work. Third, you have said this, that we are the third largest private bank. I need to show levels of hunger which are more than the others. Only then I can win share against them. So from a cultural perspective, we are trying to see what do we need to, we have great culture, but there are some parts of the culture we need to work on. So it's not just about, ensuring that, deposits is important and investing in technology and creating those platforms, but work on the culture itself and show more hunger, show more aspiration, want the desire to win has to go up, and so on and so forth. And I think that has also been a work in process. And I can see that now. When I go to meet clients, I see junior most employees, approaching a customer and introducing themselves and saying, and very soon asking, who do you have an account with and what do you do and what can we do for you and stuff like that. And it's just amazing to see that happen, because then you're seeing that seeping in from, at least in front of me, that at least they're doing it, which they were not doing earlier. So culture is an important aspect. Fourth, we have to continue to invest in our people, in terms of learning, development. Can we, make them a more wholesome banker in terms of whenever they stand in front of the customer, and can they answer all the queries? Do they understand the customer? Do they understand the needs of the customer? Only then we can offer products and services. We are not there to sell a product or a service. We are there to satisfy customers' need. That's why a couple of years back, and there's a fifth point, we said, what are the areas of distinctness for the bank? What will the man on the street see different in Axis? And at that time, we defined two things. We've added another thing to it over the last couple of years. It was about customer obsession. Am I obsessed in providing the best possible service to the customer? And that has been a journey we are on. We call it Sparsh. We also said we'll invest in a huge way in the Bharat, which is the rural and the semi-urban markets. We have done a lot of work there. We have relaunched a part of it very recently. So we have now created specific large groups of branches which will be focused only on the rural markets. There will be no large city attached to it. They'll only focus on the rural side. So we are ensuring that lives of people depend on ensuring that we do well in those markets, right? Because our market share in the rural part of the country is much lower than our natural market share. So that is another area of distinctness. I said we've added one more, which is on the technology side. So we want to be seen as a innovative technology bank. I think there was a gap between us and some of the competitors. We have definitely bridged that gap. Now we are moving towards a stage where in many areas we start being seen as better than some of the others. So I talked to you about the mobile app. If you look at for example, the new corporate platform, corporate banking platform, it is best in class. Obviously, a lot of the companies have banks who have been providing them these services forever. But when they see our platform, they know it is better.
So just to follow up here in terms of technology, do you think India is doing enough in AI in the banking industry compared to some of your global peers? And if not, what more do you think needs to be done?
Please understand that there are large number of banks which are much bigger in size than us. There are large number of banks which are based in, for example, US or China, where the advancement in AI has been, obviously way ahead of the rest of the world. And they have been investing in AI for some time, and the kind of budgets they have are much larger than us. So for me to sit here and say, oh, we are keeping pace with some of the largest banks, I think it will be quite unfair to say. Are we catching up? Yes. We can do some of the things they are doing at price which is much, much cheaper than what they're able to do at. I think in the next 6 to 12 months, you will see us not catching up, with but definitely the gap between us and them will be quite low. You hear some of these banks talk about huge amount of investments. You hear some of these banks talk about huge amount of savings they are seeing and revenue enhancement they are seeing. I don't know how much of it is true. I don't know whether it is coming through or not. I don't know whether it is double counted or not. We are also investing in AI in a big way. Right now, the results of AI are definitely positive, but nowhere close to what we anticipated when we started. We are realizing that it's a hard journey. You might get a certain savings and certain benefit upfront, and then you have to keep working on the margin to ensure that the full benefit comes through. And full benefit does take time. It is not as if you're buying something off the shelf and just implementing it here, and suddenly the whole thing just starts working wonderfully. You have your own technology stack. You have own, India has so many languages. India has own tonality. People talk differently. You have English here. People will test you all the time. In many cases, Indian customers don't want to talk to, for example, on the call center side, to AI. They don't want to deal with it. So there is a lot of work to be done. Can I confidently say that in the Indian banking system, we are at the cutting edge? Yes, I can confidently say that. And the reason I can confidently say that is because if you go and talk to some of these global players who are seen as AI majors, from an Indian perspective, they will definitely take the name of Axis Bank, which seems to be doing a lot in the area of AI. It is an important moat we can create. So for us, as the third largest private bank, it is very, very important that we are ahead of the curve in terms of investing in some of these areas, and which
Fair
we will
enough.
do.
Fair enough. Fair enough. 100% agree. In terms of some of the issues that investors have, right? I'm just going to pick them one by one. And you can correct me if I'm wrong. Your loan growth has largely been led by corporate lending, not so much retail lending. Retail lending has been slightly on the slower side. Is that a deliberate move? And some people believe that Axis Bank is pursuing growth at the cost of profitability. Is that a right way to look at it?
When the deposit rates were constrained in the market, it was very clear that we had to decide what the waterfall had to be. Because if you can, let's say, grow by, I'm just putting a number there, 15%, then I have to look at all the businesses I have and try to grow the areas where the return on capital or return on wherever I assign those deposits will be the maximum. In that, and then we were also hit with the retail cycle, where very clearly on the unsecured side, you saw losses creep up quite rapidly in the system. In that scenario, it made sense for us to definitely reduce the growth rates of the unsecured side and grow more on the what we call the CBG, or the let's call it the mid corporate to the small businesses, and focus more on the wholesale side, because it was important, because wholesale is not just about lending. Wholesale, you can create a much more wholesome relationship through trade finance, through FX, through corporate salary accounts, and so on and so forth. So we had when we were deposit constrained, we had stopped lending on some of the secured side because the return on capital was lower. Then the retail cycle hit. Unsecured also was an area where we had to tighten our credit standards. If we wanted to grow, wholesale was the best place to grow. If you look at our last couple of quarters, the disbursement growth on retail is back. As the retail cycle has settled down, the losses have started coming down. We have not suddenly opened up our underwriting standards, but now the customers are coming back and we are able to obviously provide them those loans. We are also quite confident that there was in case of at least Axis, the share of wholesale was much more than what was necessary. So we had to grow our retail up to a certain size. And that's why if you are deposit constrained, going mortgage at low spreads did not make sense. Now we have reached a bit of an equilibrium. You will see wholesale growth to be higher than the retail growth in terms of AUM or in terms of balances for some more quarters, because you might grow the retail assets, you might disburse much more on the retail asset side, but for it to reflect in the overall assets will take some time, because you have a leaking bucket in terms of prepayments and repayments, etc., etc. So I do very strongly believe that the growth on the retail side will come back. And then over a period of time, both wholesale and retail will start growing at similar rates. You might see some asset classes growing at a slightly faster pace and some at a slower pace, but both have to grow. We are a very large wholesale player. If we find the right opportunities with the right return on capital, we will grow that. Is it at the sacrifice of profitability? End of the day, all this does not make sense if you're not making money. So obviously, we have to do it in our overall scheme of things, where we look at where do we deploy these deposits, where do we deploy the capital, and we are deploying it in the medium to long term in the right areas. In the short run, you might see wholesale is growing faster. In short run, you might see, the asset size on the retail side is growing at a certain pace. But overall, in the middle to long term, you will see an equilibrium in terms of our wholesale and retail, sizing, and the pace at which we are growing various asset classes.
Will any of that come at the cost of margins? Because if you look at the margin profile as well, compared to peers that are perhaps growing faster in retail, their margins are picking up much more. So do you think in the meantime, since wholesale is the focus area for you, will it come at the cost of margins?
So, yes, there will be some impact on margins. I can't take that away, because obviously the net interest margins you make on the wholesale side of the business are lower than what you make typically on a retail side. But as I said, it's temporary. Over a period of time, we do expect the disbursement growth in retail is already picked up quite healthily. So I do expect it to come back. We have been telling the market that our long-term net interest margin number is 3.8. From a through cycle perspective, we are lower than that, but we are quite confident we'll get to that 3.8% over the next 12 to 18 months or so. Now, please also understand and appreciate that one of the reasons why net interest margin has been hurt for all the banks is that the interest rates have been cut at a certain rate that has not been reflected in terms of the deposit rates or the cost of funds. So on one side, your yield has gone down, but on the other side, your cost of funds has not moved on at the same pace. And as a result, the net interest margins for almost every bank has got squeezed. We are in the same boat. Yes, in our case, maybe it has got enhanced a little bit because our wholesale side has grown slightly faster than the retail side. But it will all normalize over a period of time. And growing and becoming more relevant on the wholesale side, I do believe, because so many banks have vacated the space or they're only lending and they're not providing all the other services, is a great strategic opportunity for us, because we can become even a bigger player on the wholesale side in terms of not just the loans, but the overall services which we provide to our corporate clients. And that is reflected in the surveys which you're doing with our clients, where we are rated very highly. Our ratings are only going up. I go to many corporate clients where they're saying that you are the first banker we turn to, and it will pay for us in the long run in more ways than one.
So just to reiterate, you sticking to the target of 3.8% net interest margins in the next 12 to 18 months. Got that?
Absolutely.
That's on the bank. But I wanted to talk to you about some of the larger issues that the country is facing, right? One of the big issues is household debt. I was looking at the percentage. Household debt as a percentage of GDP has gone up to more than 40%. And compared to a lot of global peers, this is quite high. And I'm talking more about consumer debt, non-mortgage debt. People perhaps taking more personal loans, maxing their credit cards, etc. Is that a concern for you as a banker? And what do you think is the bigger takeaway from this?
So you're absolutely right. If you look at the household debt data, the household debt has actually reached 48% of GDP. But when you compare it to some of the other markets, like China is at 58, Japan is at 61, Korea is at 89%. Though there are some emerging markets which can be pointed to, like Brazil, which is much lower. So you have to worry about who's taking this debt. 70% of this debt is in the super prime category. So these are people who can afford it, one. Secondly, yes, a lot of this debt is for consumption. But on the other side, one of the stories from Indian economy to grow is that consumption should go up. So I'm not saying they should take debt for the consumption to go up, but as customers or consumers feel confident about their future, they will consume more. And we want them to feel confident about the future of this country. So if you look at it from one side of the coin, it's not a bad thing. But you're absolutely right, on the other side of the coin, it cannot be too much or too rapid. So we need to look at, is it too rapid? No, I think it is growing at a certain rate, but it is not growing too steeply. Secondly, it is to customers who can afford it. Third, let's also not forget that in COVID, we had two sharp cycles and we have come out of another cycle very, very recently. So the banks and the general lending institutions have, through these three cycles, understood the kind of customers who are more vulnerable. And so they have modified their underwriting standards to ensure that they can take care of it. Now, there is a risk looming. Let's not take that away. We know that if monsoons are not as good, it could definitely impact some of the customers. We know, and all of us do not know the full impact of what AI could do. And so could AI lead to some job losses, or it could lead to a situation where people don't pivot enough. The kind of job they are doing could change, and so they could be potentially getting a lower salary than what they were getting in their previous jobs. That's something we have to watch out for. I think we'll get a much better idea in the next 12 to 18 months. So there are risks looming in the horizon. And as bankers, we're in the risk-taking business, so we're watching those risks. But does that one number alone bother us? No. But I think there are some other things which you need to watch out for. And especially because we are one of the larger private banks. We are at the lower end of the risk curve in comparison to a lot of the others.
Fair.
So in that sense, if let's say this was becoming a problem, it will hit some of the other institutions first, because we are underwriting the primary or more prime customers in comparison to some of the others.
So I'm happy to hear that, this stat that 70% of the household debt is in the super prime category. So you're saying that the people who are taking on the loans are the ones who can afford to pay it off.
Absolutely.
Because my primary concern is the middle income trap, right? I mean, this is a huge problem that we're facing today, where the middle income is getting squeezed. On one hand, cost of living has gone up. On the other hand, inflation is eating into earnings. As you said, jobs are very scarce. How much of a concern do you think that is, given that, as we spoke about, household debt is still a huge problem?
So, yes, I mean, if you talk about consumption itself, the consumption has been kind of stable at a certain level. Is it not growing enough? And, you're asking the question on the other side of the coin, that why is consumption not growing? I think we also have to understand and appreciate that the food prices have remained relatively stable. The government has ensured that the prices of a lot of the other items are maintained within a certain zone, and that's why RBI was able to reduce the interest rates so quickly and over a short period of time by so much. The worry is not whether the middle class consumption is low or is it not growing. I think the question we have to ask is, what is the best way to grow this consumption? Because one way is that for GDP to grow faster. If the GDP grows faster, and if the consumption, percentage as a percentage of GDP remains the same, the consumption will also grow. Or this consumption comes at the cost of savings, because if they start consuming more, the savings will go down. Now, for them to save less, their customer confidence has to go up, or the safety nets have to improve. It's a long-term, kind of story which we need to build on. It's not going to happen in a hurry. So, as far as GDP growth rate is concerned, I think India last year did very well. Last year, in spite of, I call it the Trump tariff tantrums, or the fact that India was suffering 50% tariff rates from US from August 25 to January 26. All of those things, which were happening, India still did register a 7.9% GDP growth rate. Even this year, in spite of the West Asia crisis, which has had a bigger impact on India in comparison to some of the other economies around the world, because supply chain was impacted, oil prices, second order, third order, all those things have happened. Government, because of, we have had a pretty solid strengthening credit cycle. The government has absorbed some of the shocks in the initial phase, and now slowly, gradually, they're kind of recovering some of the shocks they absorbed. RBI obviously we had a monetary policy easing. They did GST, 2 reform. All that helped. So in that sense, I do believe that I don't think West Asia crisis has been resolved. I don't think West Asia crisis is going to get resolved for a long period of time. I'm hoping that it will simmer at a lower level than before. So hopefully it will be managed and maintained at a level where there are some skirmishes, there are some problems, but it doesn't blow up into a war all over again, is the hope. And if it continues in that direction, then I do believe, given all the data you're seeing around us, that Indian GDP growth rate should, I'm sure it will pick up in the kind of quarters to come.
But then if GDP growth rate is picking up, why is it that consumption is not going up? Why is it that deposit growth is not going up? There's clearly something that's not fixed in the piece, right?
So deposit growth is also getting impacted because the level of cash in the system has continued to grow. It is up to 42 lakh crores. If you remember when demon was done, it was 17, 18 lakh crores. So cash in the economy has actually gone up. Government has reduced its balances with in the banking system. They've become more efficient, so banking balances be withdrawn. RBI has talked about durable liquidity, but it has not been able to kind of successfully implement it because it has been forced to intervene in the FX markets because of the fast depreciating Indian rupee. So that has also kind of not really worked for us. Another thing what has happened is it has not impacted deposit growth, but the nature of deposits has changed. So the CASA has been seeing a secular decline, and you see the deposits coming back in the form of higher cost corporate deposits. So, end of the day, only two things can happen. If GDP growth rate picks up, the credit demand will pick up, and that will drive deposit growth. If GDP growth rate does not pick up, then demand for credit will go down. And if, let's say, some of the other things also do not fall in shape, end of the day, deposit and credit growth has to converge. We cannot keep growing our credit at a rate which is, right now, if you look at the latest data, credit growth at 17+% and deposit growth at 12+%. This cannot sustain. Ultimately, they have to converge. Our hope is that credit growth will hopefully settle down at a slightly low level. Deposit growth will, settle at a slightly higher level. But even if, let's say, it was settled between 13 to 15%, as a bank, for us to compete and win, we need to grow faster. And so the competition and the intensity of competition for the deposit is not going to go away. We'll keep fighting for it. So I do believe that if GDP growth comes back, which, with this big question mark, West Asia, it should come back. I mean, it will come back. I mean, it's already pretty solid, but it should start growing beyond where it is today. And that should reflect in credit growth. And by the way, if credit growth is there, it will also drive deposit growth. Because at the end of the day, you give credit to someone, it comes back in the system as some amount of deposit. So kind of they feed into each other to some extent. So I'm hoping that things will only move in the right direction, because what war has taught everyone is that you can sustain the war only for that long. After that, sustaining it at the same pace as before just becomes very difficult, because, it's back to the same kind of, people say it's the economy stupid. So people realize that the economy is not working and it starts impacting the economy.
Then it impacts everyone.
It impacts everyone, and you can do what you want, but you might not be in power for long.
Absolutely.
Maybe people in Iran can be in power forever, but in some of the other democratic countries around the world, it's not possible.
Absolutely. Another big issue, and I wanted your candid view on this, because this is something that a lot of people talk about, but perhaps in hushed tones, as to why manufacturing as a percentage of GDP has not picked up, right? If you look at the data, manufacturing as a percentage of GDP has remained in the 17-18% mark for the last 10 years. So clearly, corporates in India are not putting that much capex to work as would have expected. Why do you think that is?
So you're absolutely right. Private capex has not picked up, and we keep promising to the journalists and everyone at large that it's about to pick up. So if I say the same thing again, you will laugh at me. But couple of things. One, our share of manufacturing exports is abysmally low, and I think government recognized that. So they came out with the PLI scheme. They're now covering almost 14 sectors. 2 lakh crores has been kind of given out, and they realize that if they don't get this right, we will have a problem.
But why haven't they got it right yet?
Frankly, it has right now worked for only two big areas, which is electronics and, let's say, semiconductors broadly. In some of the other areas, I think the amount of investment that is, I think it's still working through the schemes in terms of what is the exact and where that incentive should be given. So the companies are learning and the government is learning. And you have heard in a number of sectors where there have been issues between the government and some of the companies in terms of who the money should be given to, how should be given, have they met some of the conditions of the PLI scheme, etc., etc. So I think government will learn, and government will get sharper and smarter about where the money has to be given. So firstly, government is trying its best. Government is also supported, saying, okay, private capex is not happening. They've been doing the capex themselves. On the private capex side, I think for any entrepreneur to invest money, they want stability. They want stability not only in terms of the overall macro economy, but they also want stability in policy. They also want to ensure that there is no, if they are involved in the export side, that generally the global macroeconomic side is pretty stable. So stability and being able to kind of have some surety that for the next 5 to 7 years, they know what the lay of the land would be is important.
Is stability a problem right
So
now?
I think we need to work harder on ease of doing business. I think that's I would say one of the single largest problems India needs to solve is ease of doing business. While I think that at the central government level, understanding, appreciation of that is extremely high. But end of the day, you go and ask every entrepreneur, they will tell you on the ground the hassles they have to go through to get the project off the ground and then keep a project running. is still a huge amount of hurdle.
There's no work that has been done on that?
See, they've been trying, but let's say the level of corruption or the number of friction points are still so many that end of the day it's still a hassle. We might create the best one-stop window for all approvals, but they still take time. There are only few states who have been able to get it right, and they might be able to get it right, let's say at the start of the project, but on an ongoing basis, then they again run into local bureaucracy, local admin, in some cases, local politicians where there is a problem.
But we've been having this discussion for
and
years,
India
for
needs
decades.
Yes, and
to
India still
improve
needs to
ease
sort it.
And there's so many countries that have moved on, right? Look at Vietnam, look at Bangladesh, and in certain areas, in terms of
very well,
manufacturing.
right? So my view is that I think some states have realized it. So some states are doing a better job and they're getting more and more investments. I think generally, if you look at, UP is a great example where it was written off many, many years back. So there's no point going to a state like UP. But look at the kind of investments you've been able to attract because they've been able to solve some of these problems. Gujarat, Maharashtra have always stood out in terms of their ability to attract the investment because entrepreneurs see that here their ability to take care of some of these issues or ability to manage some of these issues much easier, much simpler than some of the other states. So, and some of the states are losing out, right? Some of the states like Orissa have attracted a lot of investments because they were able to provide that single window clearance and their people's experience in states like Orissa was very, very good. So they have been able to attract large amount of investments. You saw West Bengal, a lot of the industries did move out because maybe they thought that it is a difficult state to deal with. I'm not trying to comment on any politics here. I'm just saying that if you just look at the movement of capital and capex and where business groups have invested, it's a pretty clear indicator that yes, I think they find doing business in some of those states much easier than some of the other states. So my view is that ease of doing business is the problem. So why would a manufacturer where you're talking about a 5, 7, 10-year return on capital, why would you invest if you're not sure about stability, if you're not sure about clarity on policies, you're worried about ease of doing business, etc., etc. We're also forgetting one more thing. Earlier, Indian entrepreneurs were willing to take more risk because they thought that they could manage the financial system. They can take as much debt as they want, they don't have to repay it, everything will be fine. Now, it's a problem. If you take too much of debt and let's say you become a NPL case, and if it is discovered that you did not do everything right, you could not only lose the asset, you might not be able to become an entrepreneur all over again because no one will lend to you. Your name will be out there, everyone knows your name and knows that some problems happened with you in the past. So,
do you think that's become a bigger deterrent now than, there is
so
a
I think people are taking
that
less debt and so also at some stage it plays on the risk to some extent. So people will take a little bit less risk than before because they don't want to lose that asset. No entrepreneur is getting into a business to do fraud. So in that sense, my view is that the risk-taking ability is also reduced a little bit. I also see a clear, at least in a lot of business groups, where the second, third or fourth generations are not interested in running the businesses. They want to create family offices and have some professionals run it. Now, end of the day, a promoter is the one who can take much more risk than a professional. Let's not take this point away. So if the promoter is not there to take the risk, a professional will take some risk, but not as much as what a promoter could take. And if a lot of these promoter families are going to see the new generation not willing to run businesses, where is the question of more private capex? They are busy managing the money they've already made and created.
The feedback that I get from a lot of entrepreneurs is that there is so much red tapeism, so much bureaucracy, that taking large risks is almost not encouraged, as opposed to what happens in the West, where, taking big bets, taking large risks is encouraged by governments. And then if you fail, that is also encouraged to fail and move on to the next thing.
So failure is not seen as a bad thing in a lot of the economies around the world. In India, there are large business groups that are willing to take risk. I don't need to name them, but there are business groups that are taking risk. New business groups are emerging which have come out of nowhere and, managing large businesses and doing very, very well. So India is a large country, a lot of entrepreneurs with a hunger to do well. But my worry is that when you talk about private capex, the reason why some of them are not doing it is because of the ease of doing business. Also, I think we have to be very careful. MSMEs need to be given sharper incentives. You give too many incentives to any sector, then the incentive to acquire economies of scale, incentive to take risk, incentive to become, leaders in terms of technology and manufacturing technology, etc. Using is not there. Just by being there, I'm getting some incentives. So we have to be very careful about even providing a lot of incentives to all kinds of sectors in the economy. So my view is that private capex, by the way, if you look at I read today only that there is an announcement that the number of announcements by various private side on the investments they intend to make has gone up quite a bit. These are announcements, but that's a good sign. At least, people have now started announcing large projects across the entire private sector. We are seeing some sectors where the investments are growing quite steeply, but there are a number of sectors in the economy where the people are just investing enough to take care of the demand they see coming down the pipe.
So which are the sectors where you're seeing a disproportionate amount of investments right now?
So you're seeing a lot of investments on the infrastructure side, right? I mean, one is government-led, but secondly, in roads, in power, in transmission, in data centers, on the fossil fuel side. I mean, you're seeing, some of the commodity markets, you're seeing a lot of investments continuing to happen. There, the policies are clear. There, I think the government has finessed the model under which the private companies can come in and make the investments. The tendering process is clear. So wherever the clarity exists, wherever the returns, if you do execution at a decent level, you can get these kind of returns, people are willing to invest. Whenever there is lack of clarity, I think then people either want, because for the high risk they're taking, they want more return, or they're willing to take some shortcuts to manage the system so that they can get those returns. And the moment those returns are managed, that's when the entrepreneurs who want to do it the right way don't want to touch.
So if you draw parallels to what happened, say, in China, when large amount of corporate capex was put to work, banks had a huge role to play at that time. What do you think banks in India can do to increase the amount of capex that corporates can put to work?
See, if the entrepreneur has a good background, is coming up with the right project, with the right amount of equity, they will find the bank financing. I don't think the banks are saying, oh, you might be good, but I'm not willing to lend you. That's not the issue. It is, are there bankable projects, bankable entrepreneurs, bankable industrial sectors? If they are there, banks will. If not us, private credit. If not us, foreign players will come in and provide them the capital necessary. So it's not that it's just reliant on Indian banks. NBFCs will do the same. There are a lot of family offices which are opened up, which are also willing to provide that capital. So my view is finance is not the issue. What is the issue is bankable entrepreneurs, bankable projects, bankable sectors. And if that was to all come together, the finance will come through. Now in China, some of the reasons were different also. Firstly, the banks are owned by the government. For them, returns don't matter. In many cases, the state governments are themselves investors, and they're willing to put in a lot of quasi-equity or equity in the form of free land, free, less taxes, free electricity, etc., which they could control. So some of these items which they could control, they were willing to give it at a price where the project could potentially become viable at a low return, which, obviously can't happen in India. And now China, obviously, in terms of technology, size, scale, has reached a level where sometimes it's just very difficult to compete with the Chinese in some of the sectors they've become really big at. So my view is that I don't think finance is a constraint. It is more to do with the entrepreneurs themselves and what risks they're willing to look at. I mean, people who have done well, they are able to get all the financing. I mean, if you look at some of the larger groups or even the smaller groups, there are a lot of Indian small companies who are going and making acquisitions abroad. If they've done well, they're able to get the financing, even from foreign banks. I mean, till now, Indian banks are not even allowed to do these acquisition financing. The foreign banks are willing to back them up. You are the right, entrepreneur with the right background, have executed well, you're acquiring the right asset. You, at some price, you'll find the financing. That's not the issue.
Okay. Since you interact with so many of these groups, of these industries, right, I wanted to understand from your lens, where are we at now in terms of the export story? Because this whole China plus one story was something that was expected to sort of be a big boost for India. Somehow it has not played out, or am I getting it wrong? I just want to understand from your lens.
From a supply chain perspective, China plus one will play out in the long run because India is the only one with a size, scale, a pool of talent which other countries will not be able to provide. Yes, there will be some sectors in which some of the Southeast Asian countries or some of the other countries will do well. In many cases, some of these larger economies are insisting that the manufacturing has to come back onshore rather than remain offshore. So I think it will take time. It can't happen overnight, but it will come back. The problem India has is slightly beyond that. That we need to become leaders in technology, patents across various sectors. We have not invested as a country enough in research. We have not been able to attract the great Indian talent pool that exists outside of India to come and do things in India. It's not that nothing is happening, but enough of it is not happening. So unless we get that bit right, that India starts leading the world in certain sectors, and then increasingly more and more sectors around the world, around the world, has patents, has talent pool which is willing to come to India and set it up, we will have a problem. And right now, when we go back to that same ease of doing business, a lot of the Indians might be scared in coming back to India and saying that, okay, it's great, I have an idea, I do want to set up a manufacturing plant and I have great technology with me, but is India the right place where I want to set up that manufacturing plant? Or is India the right place to go and do business in? Because I might have to face hurdles which I'm potentially not prepared to do.
So what do you think the 2 or 3 things are that the government needs to do immediately to help the ease of doing business?
So government has formed a committee under cabinet secretary to look at it. They have been trying to look at various things they can do and various laws where they can improve the ease of doing business. My view is that I think if the government can create 10, 12 examples of where it is working, you don't have to do it at a very large scale, even if you can do it at a small scale, but create those clusters. For example, like a gift city. If you create, like Gift City, 10, 15 clusters across the country in the states who are willing to coexist in the center, and said in these clusters, you will get an experience as good as Singapore. I'm just taking Singapore as
But
an
don't you think Gift City also is not a very good
But it has
example?
worked over a period of time, right? You don't hear that there is a problem in ease of doing business in Gift City.
Correct.
So if ease of business is going to solve in those sectors, ensure that you give the empowerment to whatever structure you want, where they can attract companies to come, and there is the ease of doing business is just as good, benchmarked on a regular basis to the best in the world. And and this is not just about manufacturing. It should include being able to provide housing. Create a city in those clusters where people say, yes, within India you get a Singapore experience. And if you can create 10, 12, and you have to do only 10, 12, after that it will create a life of its own. Then everyone will realize the value of it, and then everyone will start copying it, because then every state will be asked the question, why can't you do the same thing? So that will automatically foster others to copy and replicate it and scale it up. But my view is that I think the government is very rightfully trying to ease the laws and improve the laws and make it easier, but all of it has to come together. And so central government might be trying it, but there is a problem with the state government. State government and central government are trying it, there's a problem at the local level. You have to solve it all at one go. And I know it cannot be solved at the country level, immediately, but maybe it can be solved in clusters. And ultimately, India can find not the size of Singapore, but a mini Singapore pretty quickly. Singapore is not very large. And create that. If we can do that, I think we'll be able to attract people in droves.
I'm not a pessimist. I am an optimist, but I think this is a discussion that we have been having for decades now, that India can become the next China, India can become the next Singapore. Somehow,
yes,
so
sometimes
many
when you walk the
economies have moved
streets, you
forward.
wonder whether we'll ever see a Singapore in front of you, because we behave very differently when we're in India, and we behave very differently when, say, we're in Singapore or any foreign country. When we're in India, we start believing that we are not answerable to anyone, and do things we will never do outside. Indians are Indians.
No, of course, there are a lot of pros, but you have to talk about the challenges as well. That's the only way you can grow. But Amitabh, it was such a pleasure speaking to you. Just a couple of more questions that I want to, before we wrap up the conversation today. Coming back to where we started, right? For Axis Bank particularly, overall loan growth has seen a decent pickup. If you look at even the last couple of quarters, right? I mean, a few quarters ago, it was around 14%. Now it's moved to around 19-20%. Just trying to get a sense of whether this kind of loan growth overall is sustainable for the bank, for the industry, and where do you see the ballpark levels, both in terms of corporate, retail?
So, I think given again our market share in advances and given the kind of opportunities we see before us, we are quite very confident that we can definitely grow at a rate faster than industry. So first important data point is what is the industry growing at. Second is our deposit growth is important because we cannot look at just the advances growth. If you're not able to grow deposits at similar rates, then that advances growth has to come down to the deposit growth over a period of time. Uh, we see enough opportunities to lend. So finding the opportunities to lend is not the issue. The issue would be, are you getting the right kind of deposits? Are they sustainable deposits? And are you confident that you can continue to grow the deposits at a certain pace so that you can support that growth in lending? Because you also can't be in the market that, okay, this quarter I'm lending, next quarter, by the way, I'm going to withdraw from the market. You can't do banking this way. So sustainability of that growth is also key for us. I think we have worked quite hard over the last 6-7 years to ensure that we can create a franchise which is sustainable, which is all-weather, which can deliver without giving surprises on a quarter-to-quarter basis. And that's what we're working hard towards. So, my view, the confidence on what we can do in comparison industry is quite high.
Okay. One final question on the bank then. There are some complaints that there has been inconsistency in credit costs. And, if you look at the past 4 quarters, of course, there was some misclassification error, etc., that led to that inconsistency. But overall, on credit costs, what's your view?
So if you take some of those one-off costs out of the equation, I think, and we compare us to the banks we get compared to, and that's why you made the statement, I think some of these banks took some of those credit costs slightly earlier. So if you go so rather than looking at just quarter-to-quarter data, if you look at a slightly longer time horizon, you will see that they saw elevated credit costs slightly earlier than us, and we saw slightly later. And obviously, they have come out of that cycle earlier than us, and we've come out a little bit later. Let's also not forget the fact that, we have a certain franchise, they have a certain franchise. And we are still catching up with some of the larger banks in terms of the quality of franchise we have. Third, I do believe that we could have done a better job in collections, and we're investing in collections quite heavily for the last 18 months or so, and we continue to invest in it. We are going through a huge transformation program in collections. So our collections ability in comparison to when I look at the other banks could have been better. So these are the three areas. Are we not thinking about it every day? We are thinking about it every day. Are we asking ourselves the question, what we can do better every day? Yes, we are. Are we investing in ensuring that our franchise gets better? Yes, we are. Our hunger has only gone up, not come down. So our effort is to obviously ensure that why catch up with them? We want to do better than them.
Some quick questions. One reform that India needs desperately.
Ease of doing business.
We spoke about that. The biggest risk to the Indian banking industry.
Cybersecurity issues.
One thing policymakers should focus on immediately.
India has had a huge amount of money leave the system from FPI's perspective. And if the FDI also has, was close to zero because, a lot of money has gone out because of the IPOs and all that. I think government very quickly, rather than questioning everything, as to why they should be giving concessions, needs to change their view. They have changed. Recently, they opened up and reduced the taxes on bonds. I think they are an important component of how India can grow. That capital is important. You want Indian markets to be attractive, and they should be permanently attractive. We should not be stupid about it, but we should be permanently attractive.
So reduce taxation on FIs.
Look at all the issues they face. Why only taxes? There are a lot of other issues which keep getting talked about. Solve it once and for all, and then be consistent.
Got it. If you were finance minister for a day, what would you change first?
I think, again, I will keep going back to the ease of doing business. I think the finance ministry has a very important role to play there, and they need to focus on that. And I think they are. I'm not for a moment saying they're not, but this can't be done in a day, but whatever could be done in a day, try to do it.
Okay, fair enough. And finally, one financial habit that you think every Indian should adopt.
I think Indians do not spend enough time on their personal finance. They spend a lot of time on doing all other things, but I would just like them to spend a little bit of time thinking through their personal finances. I find almost everyone being quite ad hoc about how they go about their savings, where they invest. It's random almost. I think if could just spend a little bit of time, they will be at peace. Their people who are relying on them for the support will be at peace, and the bankers also will be very happy.
100%. I'm with you on that because this is a topic very close to my heart. Personal finance, especially for women, because, overall, women as a cohort spend the least amount of time on their personal finance. So, thank you for that. And finally, in your experience of being a banker, being an industry leader for over 30 years, what is the biggest lesson that you have learned in your career or your journey?
I think, frankly, that is the biggest lesson. Keep learning. You have to keep your mind open about what you could learn today. We stop learning as we grow older. Somewhere we believe we know everything, and that's the biggest mistake one can make. I think you need to learn from every transaction, every interaction, every customer, every mistake you make. And as you keep learning, you discover new things, you discover new opportunities. So keep learning.
Okay, on that note, Amitabh, thank you so much for
Such a
being a
pleasure.
part of the Money Mindset.
Thank you. Thank you so much.
And thank you all for watching. All feedback, all comments, always welcome. Until the next video, thanks a lot.